For a while now, the US dollar hasn't been in a good shape, and as a result, there was a situation where President Trump accused the Federal Reserve Chairman Jerome Powell for failing to put measures in place to curb inflation. The big question is, will technical analysis of the US dollar index support the idea of a bearish US dollar? If so, what impact is it going to have on major currency pairs like Euro USD and GBP USD, as well as commodities like gold and silver? Let's dive into the charts and perform the analysis together. Now, when we come to the monthly time frame on DSY, we can clearly see that price, after a series of bullish movements, was a retracement into a monthly internal range liquidity where the dollar saw a period of consolidation. And then on October 2024, we can see there were bullish candles that were printed to signify that price was actually leaving the consolidated area to trend upwards. Now, from January and then within this month of February, we can see that the dollar hasn't been in a good shape and there is a bearish movement. And what I see on the chart is a monthly internal range liquidity that price may retrace to before there is an upward movement towards our old highs here. That is if the dollar will regain its strength and then go upwards. If it won't, then I'm expecting this monthly internal range liquidity to be disrespected. Now, when we move onto our weekly charts on DSY, we can see that there was this weekly internal range liquidity that was inverted. Now, after the inversion, price came to retest this area, and then I'm expecting that this weekly inversion fair value gap will further push price lower towards our monthly internal range liquidity, which also serves as our draw on liquidity. Now, when we go onto the daily chart, we can also see very clearly here that after a bearish movement downwards breaking of structure over here, price came back, retested our weekly inversion fair value gap, and then printed a very strong bearish candle towards our monthly draw on liquidity. Now it left behind an order block where we are looking for price to retest before further moving downwards towards our monthly internal range liquidity. Now, when we come to our 4-hour chart, we can also see something similar over here. The same story is being told over here. Now, after this expansion lower, we are expecting that price will at least retrace into a premium level within our daily order block before we can have further movement lower towards our monthly draw on liquidity. Now, as we all know, the DSY is negatively correlated with the Euro USD and then GPUSD, and in some cases also the gold. As in, when the DSY is making bearish movement, we are expecting to see higher prices on the Euro USD, GPUSD, and then in some cases gold. So quickly we move on to our Euro USD chart. Now on the Euro USD charts, we are on the monthly time frame here, and we can see that it was price has been trending in a bearish direction, and then after this bearish movement, there was a retracement into a premium level. That is, price respected our monthly internal range liquidity here in the premium level, and after that there was a series of consolidation. And after consolidation, if you consider our market cycle, you know that after consolidation comes what expansion. So there was an expansion into our monthly bullish fair value gap, and then with this expansion, it left behind an internal range liquidity which we are looking for price to revisit before going bearish. That is if it will continue in a bearish move. So currently we are looking at price moving bullish towards our monthly internal range liquidity. When we come to our weekly time frame on Euro USD, we can also see here that price for this week came to a weekly BPR, that is a balanced price range. It tested that area, and we are expecting price to be pushed further upwards towards our previous month's high, and then finally to our monthly draw on liquidity. Now when we come to the daily time frame on the same Euro USD, we can also see that price after this bullish movement retraced to our daily order block, which is also residing inside our weekly BPR, and then price started moving upwards. Now, ideally, I'll be expecting that price retraces into a discount zone before there is an expansion higher, but price didn't actually reach a discount zone, and it is possible, as you see how this uh, Friday candle was printed, it is possible price can continue lower to our discount zone before pushing higher, or price can actually come back to sweep Wednesday's low into a discount zone on the daily time frame before pushing higher towards our previous month's high. Now, when we go to our 4 hour chart, we can also see that price retraced into a discount level before expanding higher, but I couldn't take out our daily external range liquidity. So we are expecting that price after this bearish movement will come back within the daily order block as we indicated earlier, and then the daily discount level before pushing higher. Now, this inversion, 4 hour inversion fair value gap has also, after it was tested here, it is very likely that price can still come back and then retest that zone. But as you can also see here, there is a bullish internal range liquidity on the 4 hour chart that price is currently respecting. If it will continue to do so, then we are expecting that this 4 hour internal range liquidity will push price higher towards our daily external range liquidity, and then the monthly draw on liquidity. So that is it on Euro USD. And then, as we already know, GBPUSD is positively correlated with Euro USD. That's in they move together. So when we are seeing higher prices on Euro USD, we are also expecting to see same on the GBP USD. So on the monthly time frame on GBP USD, you can see that price after a series of down close candles is retracing into a monthly changing state of delivery. Now, if this bearish move will continue, if this bearish trend will continue, we are expecting that price will retrace into a premium array before descending lower. And as we can see, there is a monthly internal range liquidity that resides as this premium level. So we are expecting that price will continue to retrace higher into this key level before price goes lower. When you look at our weekly charts on GBP USD, we can also see that there is an internal range liquidity here that price respected to further push price higher. And then this low here formed an SFT with Euro USD. And then this shows how strong the British pound has been against the US dollar these few past week. And then when we go back to our daily chart, we can also see that there is a daily internal range liquidity here that price respected on Wednesday. So actually, Wednesday created the low of the week. That is a midweek reversal and then push further upwards. Now there was a bullish order block that was also created on the daily time frame, and the price came to tap on it. Now we are waiting if this daily order block will be respected to further push price higher. Now when we come to our 1 hour time frame, you can also see that there is a sign of price moving higher. But actually, if you the daily order block is going to be respected to go higher, I'm expecting a change in state of delivery to occur at this level, and then price coming back to it to respect it to push price higher towards our daily and then monthly draw on liquidity. So that is it on GBP USD. Now, when we move on to gold, we can see that on the monthly time frame on gold, price has been bullish, and then coming from this monthly internal range liquidity, the series of bullish candles that were printed is likely to leave behind a monthly internal range liquidity here. But at the moment, there is another block that has been created, and I'm expecting that in a later day or in a later month, price comes back to respect this monthly order block to further push price higher. Now, when we drop down to our weekly chart, we can also see that there was a weekly balance price range that was created and then respected to further push price higher. Now, on the daily chart, we can see that there is a daily internal range liquidity that's price respected on Friday. Now these lows were swept into the daily internal range liquidity and then closed back within. So in the coming week, I'm expecting that from this daily internal range liquidity, at least price should reverse towards our daily external range liquidity. Now, since the gold is positively correlated with silver, I'm also expecting to see higher prices on silver. As I usually say, no matter how good you are at fundamental and then technical analysis, retail traders like us do not move the market, hence cannot always predict where exactly the market is going. Therefore, it is always advisable to wait for your intermediate and lower time frame confirmations to align with your higher time frame narrative in order to find high probability trade setups. If you want to know how I look for my highly probable trade setups every single trading day, kindly follow the links shared on this video's end screen. Good luck and stay safe.